this is the part of the video where I will guide you all on how to use this indicator section, okay? So in the indicator section, I will introduce the trade funding option part, okay? This is the indicator section that has a lot of colors like this. So when I turn on this indicator, it shows these colors. In this section, it's called Intel Target V4, okay? And this part is highly sensitive. So it's used for trading options and trading stocks. No, not for trading stocks. I use it for trading funding. Because its sensitivity is high, that's why I use it. Okay, but if any of you are trading stocks, then you shouldn't use this. Because if you use this, you'll be very prone to FOMO, so you should use Control Street Zone instead, okay? So when you use this, if you specialize in trading stocks, then its sensitivity will be a bit different, right? Because sometimes it will track things like pull chops, bear chops, or fake pulls, or fake bearish moves, and it will be able to test those, so it will show us the trend. So when you trade stocks, this indicator will be your safety net. As for the indicator, the very first indicator, this part is specifically for when you see these kinds of colors, the sensitivity is very high. This one is only for trading futures or if you're trading currency or Bitcoin, because its sensitivity is okay. In this indicator section, usually if you already have trading experience, you would turn off the signal part. You won't need to use the filter. Because you already have the experience and knowledge, you're fully equipped, so you don't need to use it. You can just turn it off. Okay, when you turn it off, as you can see, you'll only be looking at the price action. This part, this management section, really, the first thing it does is let you know the market trend. And when you look at the price action, if you don't have it, right, then you won't be able to guess what direction the market will go. So this part will support you. It will help determine the trend for you. But you also shouldn't rely on it too much, because it only determines the trend based on the buying and selling pressure. So it calculates within what percentage range of the momentum, it figures out the trend of that driving force. So sometimes you can't really rely on it, because sometimes there's strong buying pressure and then it suddenly shifts to strong selling pressure. So the signal will be very sensitive and it will just follow that buying and selling force. And it will be based on the buying and selling pressure. It separates out the price zones. The price zones for us, it doesn't just appear out of nowhere. Yeah, it will separate the price zones for us. When you use it for a while, over time you'll start to understand how it calculates, okay? But when you first start playing, you won't understand it yet. So you need quite a bit of time, at least a week or two, to really get it. Because during the time when the market fluctuates, you'll see why the management part gives you the price right here. So within these price sections here, why are there different colors? What do the colors mean? The most important thing is when you trade, you need to know the waves this price zone is called the wave accumulation zone, and which price zones have momentum, and which zones are likely to decrease. So here I'm using the 10-minute time frame, and this section here is the setup entry part, and then after that is the change of character section. If you see the area price action hesitating here, this is considered a sideways zone, or what we call the wave accumulation zone. So when the price action is below the setup entry zone, this is considered a downtrend area. If the percentage of sellers is strong, then this can change the trend and signal a downtrend for us. So right now it's in an uptrend, but we're actually in a sideways trend, meaning this trend hasn't fully shown us the buying strength yet. So we're still technically in a downtrend. Okay, but here there is already some buying volume, so it's moving sideways, which means it could be accumulating, and by the end of the session it might push upward. Okay, so the highest price zone for today could be around 526. Okay, so for this QQQ, I'm using the 10-minute time frame, and the highest price zone that could happen today is 527. Okay, Uh, so when I switch to the 15-minute time frame, its max price up here is 530 and 527. See? Then after that, we know that in the case where the price on the 10-minute or 15-minute chart fills up the sideways zone and breaks through, we have an order block here, which is pretty much like a resistance. So the price was rejected here yesterday and dropped down, returning to Monday's price level. And this area is also considered a support zone. If any of you have trading experience, you'll clearly understand this boundary area. So right now it's filling out here. So at the end of today's session, let's see if it can break this structure or not. If it manages to break through, then the maximum price today, according to the 15-minute chart, will be 530. In the case that it doesn't break today and it fails at this price zone, then right at the trend area, the trend of character, this is the price zone of the order block. And if it goes up here but doesn't drop, then it could indicate that the likelihood of a downtrend for tomorrow is very high. Okay, so when I open it on the 1-hour chart, okay, so when we use a smaller short-term time frame, like 10 or 15 minutes, we usually calculate it within 1, 3, or 5 minutes. That means we look at the wick first, then the body. Okay, it's the same with the larger time frames. When we use the 1-hour chart, that means if we're looking at 10, 15, or 5 minutes, we're focusing on the wick first, then support and resistance, and then the body. It's the same for the 1-minute, 3-minute, and 5-minute charts. So the 1-minute chart represents the wick, then the 3-minute chart, which acts as the support and resistance for the 5-minute candle. Okay, and the 5-minute chart represents the whole body. It's similar for the 1-hour chart as well. So the 1-hour chart is the body, and within 1 hour is the body of the 5-day candle. Okay, so we need to understand that for the 5-day candle, the 5-minute chart is the wick, and the 10 or 15-minute chart is the support or resistance. After that, the 1-hour chart is the whole body. Okay, so here, this red area helps us understand where the support or resistance is. And this green area is what we call the body. So now, you see, right now we're within those boundaries. These boundaries are considered the dividing line between support and resistance, meaning the pattern is currently forming a trend. So with these boundaries, normally we avoid them, we don't trade. That means we don't trade when it's forming like this because we can't clearly identify its trend. Usually we wait for it to break out of the structure. That means up here, we usually wait for it to break out of the 52 price zone to determine the direction. So if the price is above this 52 zone, it indicates an upward trend. And down here in the main area within this setup entry line and the confirmed trend of character line, when the price action is below the trend of character, it means a clear trend has formed. But if, like in this case, we can see that on the 1-hour chart, it's still a downtrend and is giving a sell signal. And in this section, it tells us about risk management. That's it. If we're shorting, we need to manage our risk in case the trend reverses and goes up. So here, it has already formed for us, but when the price comes back here, it doesn't go below the trend of character zone. That means this price hasn't fully entered the downtrend yet, so it's possible it will take a long time to establish a trend. So we're currently in the boundary zone between an uptrend and a downtrend. This is called the PP line. Okay, so now I'll use the 4-hour time frame. I'll use the 4-hour chart. So in everyone, in the 4-hour chart, that's it. The structure of the 4-hour chart is all here. When we see the indicator displaying like this, when the label area contracts like that, it means it disappears and forms like this. That means its structure is gone. Okay, when the structure is gone, we'll see the indicator. When that structure is gone, we'll switch the time frame. For example, we switch the time frame to check to see, and if it doesn't show up, we just keep switching sometimes until we see the level. So we check gradually, and we can see like here on the 12-hour chart, it's still there. So that's when we see that the structure is gone. So why do we say the structure is gone? When it's gone, it means the price has reached an all-time high, meaning it's hit its highest peak and can't go any further. Within that structure, when it's done, we have to switch the time frame. So when we switch the 12-hour time frame from a smaller time frame to a larger one, we can see it here. So here we still have a trend and the price action is still within this area, meaning it's moving sideways. There could be some bad news, and if the price dropped to 18 or there's a downtrend, then it's possible that the price could return to the 47.2 region. And with the current price at 58, even if the market experiences some negative fluctuations or bad news, in the long-term trend, we can see that 47.2 is the lowest price area. Okay, and the highest price area is 50 at the current time is 55. So if the price action can still hold, then this trend can still be considered an uptrend. Okay, so as long as we're still within this structure, we need to see how long this structure will last. Okay. So we'll use the cloud here. This cloud represents its structure. Okay. So I'll measure the cloud. From this point to this point, it shows here that it's 55 daily candles. No, actually, 55 candles is about 82 days. Okay. There, its volume is about 1.43 billion. So with that, we'll know. And if we look down here, right here below, we can see the dates. Starting from June on April 11, 2025 is the point where it begins to open. And the end point of this structure is, as you can see, June 30, 2025. That's when this structure will just finish. So by looking at it this way, we know that this trend will end on June 30th, which means at the beginning of July, the trend will take shape and start to the trend will determine which phase of the market we are in, how it is forming, and we'll be able to predict whether the next market trend will be upward or downward. The indicator has already calculated the structure for us like that. So here I'm explaining this so everyone can understand in the section about how to use it. Now, from the smaller time frame to the larger time frame, you can see and understand the segmentation part, right? Later on, I'll come back to the trend on the 1 day and 1 hour time frames. Let me explain what the 1 hour time frame is. Okay, the 1 hour trend in this section shows us a 5-day period. So when we see the sell signal here, right here, it's indicating a sell or buy signal. And these red and green colors represent its momentum. Okay, these red and green colors indicate momentum, and right now we're in a sideways phase, meaning the trend is sideways. But in this signal, it tells us that the current trend is an accumulation phase for an uptrend. Okay, accumulation for an uptrend. So now we're going to measure its structure. Its structure is that today is the 3rd day, right? Yesterday was the 3rd day, May 20th, 2025. And starting from this structure, we extended to here, which is on Tuesday, May 27, 2025 at 5 a.m. This structure will end after about 55 candles. And this is over 6 days, right? Can we see how the structure is calculated? So this is calculated as about 6 days and 15 hours. Okay, 6 days and 15 hours, right? So this structure is fine. It will fluctuate around 6 days and 15 hours. So let's just round it up to about 7 days. That means this indicator measures the structure for us, and it will change within 7 days. Almost 7 days, that's when this structure ends. So if we measure it like that, it's about almost a week. Okay, so the trend is like, we can consider it as almost a week, but we can't really count it by weeks. Instead, we count by structure. So we can treat it as if this 1 hour candle is almost like a weekly candle. So we can see that it's possible we're currently within the weekly candle's resistance. And if that's the weekly candle support, then it's likely that 497 is the weekly support. So next week, if the trend is downward, its lowest price could return to the 496 price area. Okay, that's my guess anyway. So for the upcoming week, this is the support area or the core of the weekly candle. So right now we're either at the core or at the resistance, And if it goes below here, then this is the range of the body of the entire weekly candle. When I say the weekly candle, I mean the candle that represents the structure. We can't just count Thursday, Friday, or 5 days or a week. We can't calculate it like that. What we calculate is the structure itself. So what does structure mean? Structure refers to the point where it opens and the point where it closes. That's what we consider as the structure. We don't trade based on days or 1 or 2 days or by time frame or by trading weekly. We trade based on structure. So when we use a certain time frame, we have to measure how many days that structure covers, and then we estimate how many weeks that would be. For example, I'm just estimating based on my own thinking. Okay, so simply put, everyone will understand that each time frame corresponds to a structure that spans a certain number of days, and within that you can see where the structure starts to open and where it will end. Okay, it's the same thing with the daily candle or the 15-minute candle. Okay, for the 15-minute candle of today, which is Wednesday, its structure opens at around 9:30 in the morning. Okay, and it ends at 9:30 a.m. on the 21st, which is Wednesday. So this structure will close at 7:00 a.m. on Thursday, the 22nd. Then I will see how much this structure is. Right? Okay. So this structure will be counted as 21 hours and 45 minutes. That means the structure of this 15-minute candle starts from today and goes until tomorrow's. That's how the 15-minute structure works. So if today the price moves up here, up to the 40-50 price range, that means this structure is over, its trend has ended. So it's possible that tomorrow, if today it pushes up, the price area will be there. For example, just for example, I don't know how it's going to move today. For example, if today it goes up to 53 as the highest price, then when this structure is over, it's possible that it will drop or it will create a new structure. But we don't know what the new structure will be or how much it will be. But we can only confirm when the price action is above 51, that's when a bull trend, a full bull trend is formed. Well, now it's not above this 21 year and it's still in the 21 year, between 21 year, 18 year. This is considered sideways. In here, it's considered sideways. But if the price action is down here, it's considered a downtrend. So right now we're at the support and the core of the downtrend. This part is a bit tricky. This is the core and we're currently within the support and resistance. If you've been trading for a while and have experience, you'll understand what I'm talking about. And when the price action is above the 21 level, it starts to form the body and momentum of an uptrend, and its endpoint is at 30. Okay, it's max price when I use the 15-minute time frame. And if I use the 14-minute time frame, also before we use the 14-minute time frame, it's the same. My explanation is similar to the 15-minute time frame, so we understand that this is the highest price zone, which is considered the resistance area, and this is the lowest price zone. So this empty gap here is considered the wick of the candlestick. Okay, so same thing when we measure this. Here is the opening point of the structure, and this is the closing point of the structure. So when we open the 10-minute time frame like this, we know that this is 53 or 56 candles, which is calculated as 9 hours and 20 minutes. Okay, so today, so now that we understand its structure, for example, if it's moving sideways like this, then now on my side here, it's about 10 o'clock, 9 hours. So let's count 1, 2, 3, 4, 5, 6, 7. So the end of this structure will fall around 8 or 9 hours. So if it falls at 9 hours, that's about 8 o'clock. Okay, this structure is over by 8 o'clock. Okay, so if today it doesn't complete the move, then it might happen overnight, and that's when the structure will form. But if it doesn't go above this price zone and move up here to finish the structure of this uptrend. If it doesn't complete like that, then it's likely that we're still within the trend. Okay, if it doesn't move the way I described and come back here, then it's likely that we're still in the bear trend of the larger time frame. Okay, so this price zone could be here, this is the resistance zone, and this is the support zone. If it can't move up to the price zone I mentioned, like going to 35 for example to fill this structure, then if it can't break through like that, it's likely that we're still in a bear trend. So when the price can't break through this 22 zone, okay, then this is the PP line boundary between the uptrend and the downtrend. In the case where the price action doesn't create an uptrend to reach the 30 or 35 zone to establish a new upward trend, that means it will create a gap up, which is another uptrend, or the 35 zone will be the highest price area, right? So if it moves like that, there's a high chance that tomorrow's trend will be a downtrend. Okay, if it can't form, but if in the case that it can break through and move up to 35, and if tomorrow it drops, then it will fall back to 37. Okay, 37 here is the support zone. So this can also be considered an uptrend. Okay, this will also be considered an uptrend in the case that today it doesn't push up to 35 and instead drops and holds at 37. Then in this situation, this trend will fall back down here again. Okay, there. It will drop back here, which means that its opening point of 49.96. Okay, when it goes up here and it can't get above this PP line at the boundary I just explained, then the trend formation is likely to fall back again. So why do I predict that? I base it on 5% of the market trend. That is, the principle is that every day must be 5% every minute, 5 minutes, 10 minutes, 15 minutes. All are calculated based on 5%. After that, for the week and the day, it's also based on 5% of the profit. And then for the month, the cycle, and the year, it's all based on 5%. Why is the 5% principle formed? It's based on the interest rate set by the Fed. For example, if the Fed raises the interest rate, if the Fed sets the interest rate at say 3.5%, then that 3.5% will form this percentage, and this percentage will follow the time frame. That means it can be calculated from 1 minute, 10 minutes, 5 minutes. All of these are included in this percentage. Then when calculated by the hour, week, and day, what does it create? It creates a structure, creates a price for the entire market, and it is based on the Fed's interest rate that this is formed. So we take the principle of how the Fed's interest rate is formed and apply it to the structure in order to calculate and measure its trend. And that's right. We can measure the trend and determine the price range in which the structure moves. That's it. It's really that simple. It seems that right now I can share this part, but maybe you all might not be able to fully grasp it yet, simply because you don't have the experience. However, if over the long term you gain more experience, if you trade for a long time, then you can apply this algorithmic approach to the market and you'll be able to calculate and estimate things. We can't calculate the exact accuracy, but we can make estimates, right? This will become a habit, and then when we trade, we'll be able to understand things more easily. It's like a math problem that after studying for a long time, you'll remember it in your head. So when you look at it, you'll be able to tell where the price is going. Usually, for those of you trading with CIT or ICT, most of you won't use indicators. Most people just look at how the price action is displayed and then figure out how to trade based on that. Those are the experienced traders. People who have been trading for at least 10 or 15 years, they usually don't use indicators, okay? There are people with many years of experience who specialize in CIT, and they can remember those concepts just by looking. But for those of you who are just starting out or who don't have much experience, these indicators will help support your learning, help you apply the knowledge, and help you understand how the market structure moves. So this indicator is a tool that supports your learning, allowing you to practice and memorize the structures. After you've memorized these structures, eventually you won't need to use this indicator anymore. You'll just be able to look and know to predict based on the basics and techniques you've learned. So you can analyze and apply them to this market. So let's get back to the topic of using this indicator. So why does this indicator change? It's sensitive and doesn't provide a stable trend. As you've seen just now, within a few minutes it shows an uptrend, and then within a few minutes it switches to a downtrend. Because, well, the price is not stable, meaning we're currently in a choppy zone. First, we're in a resistance zone. Second, we're in a support zone. And the third thing is that we are currently on the PP line, but usually we don't know if this PP line is from the 15-minute candle, the 10-minute, 5-minute, or the 1 hour, or even the 2-week chart, right? And we also don't know whether we're in the resistance of the hourly, daily, or weekly candle, or in the support of the hourly, daily, or weekly candle. This is an example I'm giving. Usually the waves that are often noisy are the sell and buy signals. If any of you trade based on buy or sell signals or momentum, you often encounter signals that aren't clear, undistinct, and don't provide accurate forecasts. Usually we are within the resistance, support, and pivot point lines in the price zone where the waves tend to be noisy. So if you encounter that situation, you need to switch to a higher time frame to identify the market trend, to know where you are, where the price action is within the market. Only then can you determine the trend. And from there, you can decide on the direction to trade. This signal only serves as a support for us. Normally, I just follow certain principles. For example, how do we overcome the limitations when using this indicator? How do we deal with those noisy price zones? The open point is down here, right? After that, it moves up here, and so it must essentially end the structure in order to create a new opening and closing point. Then it is likely that this is the closing point. Okay, here's the opening point, so it's possible that this is the closing point, or this could be the closing point of the trend, the bull trend, and it forms a new bull. So the bull opens here, and this could be the close of the bull, meaning the closing point of the bull, and it forms the bear point. The bear opens and it forms a downtrend. Okay, so in this case, it's possible that this is the closing point of the bull, and that's the opening point of the bull, or the opening point of the bear. So we're currently in this section, which is either resistance or support. Okay, so when the resistance and support aren't clearly defined, we consider it a PP line. A PP line means that the trend hasn't become clear yet. The way to identify this is by using the change of character line and the smart shoulder. Okay, so when we use these two to distinguish, if the price action forms a low right at this point, it will create a neckline. This indicates a downtrend below here, and the price action is still unclear. So if the price action is above the change of character, then it's considered a bull trend. At this point, at this boundary is considered sideways. You see, this is a sideways phase. So the indicator will help us recognize it. That's why we have to spend a lot of time practicing diligently, understanding and learning often over and over again so we can remember. How long it takes to remember depends on our knowledge and how good our memory is. Yeah. To remember these concepts, I notice these price zones that move like this. See? So I remember these concepts to trade. So if you trade stocks, it will be better because when we experience noise in the market, it doesn't affect our psychology as much. If we trade positions just buying stocks and we know the trend is up, then it will be easier to manage the risk reward, which is within this area. For example, if I enter here, I will manage my risk reward here, and I expect my target to be up here. So when the target reaches here, I will just as an example, let's say I start this one. Hold on. Okay, for example, just to clarify. Okay, never mind. Yeah, in a case like this, for example, if I make an entry here, just as an example, in this case, I make an entry here.
Okay, for example, if I make an entry here, then my take profit, I will manage it here. Okay, and my stop loss will be like this. For example, in the case where we make an entry here and the price action moves up, we can see that, say, even if we enter here, or even if we enter here, when our price action moves up and we're in profit, then during the time we've just started, we'll accept the raw risk in this part. Okay, once the price action is already above this safe zone, then we can move our stop loss up to become a trailing stop loss to protect ourselves, like this. So even if the price is here, at this point we've already made a profit. In case the market turns bad or is affected by something, if it drops back down here, then because we've already set up the trailing stop loss, our platform will automatically sell so we can manage our risk and avoid losing our capital. We accept losing on this part, or we accept not making a profit. Okay, then we just pay the fee. In the case where the price action continues to move up, the best way to manage risk is to move the trailing stop loss along with it. We move the stop loss to become a trailing stop loss, okay, so we can manage our risk. So this part here shows us how to manage risk. So at this entry point, when I look at it, I'll set up the entry here, and the price action that moves above this line, only then is my entry considered safe. But if I enter here and the price action is still like this, just moving sideways, and it hasn't moved up yet, then this entry isn't safe yet. It could potentially drop. So I'll accept the loss at this point, depending on how much loss I'm willing to take. Okay, so this is where the raw risk management part comes in. Here, I'm just explaining this part for you to use. So basically, I'm just sharing the basics so you understand what this is for. Okay, after that, you'll understand them. Okay, that's the explanation part within those signals. The signal in this cloud section lets us know that the structure is open and when it will end. And when it ends, this will give us signals that the level will start to narrow. So it tells us, okay, that structure is finished and we have to switch the time frame. Okay, next, here we have the volume section. Okay, this volume represents something similar to support and resistance, but it's considered the fair volume graph, and it's also regarded as an order block. Okay, so when we use this, we can see this area here. The red area is the sell zone. The green area here is the buy zone. And if we see that the green area is higher, the percentage shown here is higher, that means the amount of buying is greater. So when we're trading in an uptrend, we look at this and it gives us more confidence, okay? With a higher buy volume, the uptrend is stronger than the downtrend. Okay, in the case where, for example, the opening point is here, but the price action moves up to here, and it gets like here, it hits resistance, it gets blocked. But we look down here, okay, there's a very strong buy volume. So when the price comes up here and gets rejected, it hits the resistance, right? Or the order block. So when the price comes back here, I'll start to pay attention here. I see, oh, the green buy side is strong, the sell side is weak. So, okay, I place a buy order here and I'll still make a profit. That means I'll follow this part more than I follow that one. This is so we know which boundary is our entry point and which boundary, when the price breaks through, will create a strong effect and how we'll manage it. So here, depending if you trade stocks, you might just look at the trend or something like that. So you can use the 1 hour time frame, because here I'm using the 1 hour time frame to explain the market trend. But usually if you're trading and you want to enter at a precise price so you don't miss it, or you don't want to buy at too high a price and you want more accuracy, you can use the 1 minute, 2 minute, 3 minute, or 5 minute time frames. Okay, after that, we start looking at the 10-minute or 15-minute charts to see how the intraday trend is showing and where the momentum is. And with the 1 hour chart, we're looking at the long-term trend. For example, like that, all right? Let's go back to this order block area. When we see this price action, it opens here, moves up, and then comes back down here. We look at this. Here, there's a buy and sell volume. If we see a strong buying volume, then okay, we'll focus on buying. If we buy, the chances of it going up are higher. But in the case where we see the buy volume here and the sell volume here, and the sell volume is stronger than the buy volume, that means when it's stronger, this will change color. So here, look, if the buy volume is strong, we'll see it's green, which means the upward trend will be stronger. But if we see that the buy volume and the sell volume here are red and the sell volume bar is longer, that means the sell volume is strengthened. When the price gets rejected here and drops, it will likely backtest this area. Usually it will test this area first, and if it tests it and doesn't bounce back, then this point is likely to be where it drops sharply. So you all need to pay attention to this order block area, because this area tells us the buy and sell volume. Even if the price opens up and gets rejected right at this resistance zone and drops back, even if it drops, it's the same thing as I explained. It will retest for us one more time, and then it will continue the uptrend. Okay, everyone understands the part I just explained, right? Okay, in this indicator section, you'll see the red zone, the red color, and the blue color here. Okay. Okay. In the indicator section, there are two lines on the indicator, a blue line and a red line. For example, let's switch back to the 10-minute time frame. Okay, like this. Just like earlier, when we looked at the smaller time frame, we saw this was the order block. When it hit this resistance, it couldn't break through and move sideways. Now, on the 10-minute chart, it's breaking above the, when it moves above the order block, the trend is upward. So there's a possibility. So I'm just letting everyone know. Here we can see this line, this red line here. This is one line, and there are two lines. So this is considered support 1, and this is support 2. When we see the price action forming the first support, it will go on to form a second support. That means it's like one leg, two legs. So when we see one or two legs, it forms something like the VWAP. With VWAP, this is called the wick. Then after that, it starts to form the support and resistance of the candle body. And then when it creates the body, the trend is upward, right? So let me explain. You see support 1, support 2, meaning leg 1, leg 2. Okay. Then when we go back to the higher time frame, that is, we're seeing on the 10-minute chart that we can already spot support 1, support 2, leg 1, leg 2 within 10 minutes, right? So now let's switch back to the 1-hour chart. Okay, so here, leg 1, leg 2, you can see here, the blue color is the same thing. If this is the support or no, resistance 1, resistance 2, we can already see it. So this part is important when we see the price action getting close to this area. And if it comes here but can't break out of this support 1, support 2 zone, then there's a high chance it would drop. Okay. In this case, if the buying pressure is strong and it breaks out of support 1 and support 2, if it manages to break through this area, then this trend, this uptrend is very, let me be clear, it's a strong uptrend, a really strong one. If you like trading momentum here, I'm explaining this in the context of a higher time frame. So if you prefer to trade on a higher time frame, this is what's called trend trading. Trend trading means you expect the trend to continue for the next week or two, or maybe tomorrow or the day after. For example, in this case, this point in the long-term trend is really perfect. But if it's in a short-term trend, I wouldn't suggest trading this way, because when we trade, we're trading on smaller time frames, 5 minutes, 10 minutes, 15 minutes. So if we encounter this situation, this is what we call an entry point. This is number 1, okay? And if it manages to break out, then you buy, and when you buy, you can make a lot of money in this phase. So you all need to understand we are currently testing, and this is the momentum. See? On the 1-hour trend, we can see a buy signal. So let me explain the buy. This is the momentum that will break this level. If it manages to break through the 522 price zone, then it will fluctuate strongly, and we'll see a strong trending movement. Okay, so you all can see that, right? Okay, so you understand that there's support, resistance 1, and resistance 2. So if the price action hits this price zone and manages to break through, then the next trend will be an uptrend, right? So the way I explain it to everyone, you should understand that when you use indicators, you see these signals, these details are right here. It's very important, okay? In the case where I'm talking about order blocks, I'm referring to an uptrend here. If we see a downtrend, then it's the same thing. We just apply it in the opposite way, exactly the same. All right, so with this explanation, I finished explaining this part. Normally, we will look at this table. This table is the main one. With this table, we can change its size. Okay, we can make it a bit bigger if we want. It's up to us. So for example, if you like it bigger so you can see it more clearly, you can set it to medium size. Okay, so this table here is the condition table for the momentum trend. Today, we're looking at this table. Okay, let me explain this table. You can see today it's all green, all green. That means today the buy momentum is very strong. So if we see that this table shows very strong buy momentum, then there's no reason for us to go short on the market, right? So this is the momentum table. And when we use this momentum table, it will change depending on the time frame. So when we look at the time frames where the color changes, we know that time frame is weak and that there's strong selling pressure there. So we just observe and understand. So by looking at this time frame, we pay attention in order to predict the trend, so we can decide on the trend to trade. So that table is the momentum table, and today it's all green, which means we know that today's trend is an uptrend. The market is green right now, so there's no reason for it to be bearish, right? See, when we look at this table, this is basically a sentiment table. So when we trade, our mindset will be more stable, right? Now, I'll explain a part of this table. Why does this table have a start specifically at the number 3 position and the stop exactly at number 10 and then a stop at 1 hour? These are the areas that are the most clearly visible to me. For example, many of you trade on the 1 minute or 2 minute chart. So I've marked here that if you want to find an entry point, the price action on the 3-minute time frame will be clearer and the entry will be more obvious. If any of you prefer trading on the 5-minute or 15-minute charts, then on the 10-minute time frame, you'll be able to clearly see the trends from both the 5-minute and 15-minute perspectives. And for those who trade longer term trends like weekly or daily, the 1 hour time frame is where you can clearly see how the price action is moving. That's why I mark it this way to support you all. So you can practice, learn, and understand which time frames are important in the market when you look at the chart. Okay, so in the chart section, you need to pay attention. The yellow color represents momentum, okay? And here, there's also a green color, okay? The green color indicates a strong buy trend. As for the yellow color, it means the volume is starting to increase. So here, that's how it is for a downtrend. Red is the downtrend, right? If you see pink or purple, that's downtrend. But if you see a lot of mixed colors and waves, that's usually showing a sideways market. So which one is in control? Most of the time, this part is what controls us. So if you find it distracting, you can just turn it off. If you turn it off, you only need to look at 2 colors, the color for a downtrend and the color for an uptrend. Okay. And if you only want to use the downtrend and uptrend signals. But if you want to use momentum, then you turn on the momentum section, and that's the part that gives you guidance here. Okay, so in this EO section, you can see here, this is the uptrend part, and here the buy volume is strong, and here the buy volume is weak. It's not just that in this EO section, it actually tells us the buy and sell volumes. That means when the buy volume is strong and there are a lot of people buying, the trend will show up. Then when people start to expect that the price is too high, like it's at an all-time high, then the buy volume will decrease and people will switch to a defensive stance. That is, they'll set up because they don't know if the market will keep going up, so they'll start managing their stops or selling off some of their positions. That's usually how it goes. So when the buy volume decreases, it will form a sideways movement. Here you can see the buy volume decreases gradually, not suddenly. It's not like you see, oh, this is going up, now it's about to drop, and then you jump in to short it. If you short it while it's moving sideways, you lose. This section only displays buy and sell, and it shows us when the market is swinging. Okay, so in the indicator section, there's a purple part and a green part with a downward arrow. This indicates momentum, okay, and this is increasing momentum. This one shows decreasing momentum, and in the indicator section, there's a black area here. This black area is the swing area. So what does swing mean? For example, you see there's a buy signal and the price keeps moving up, but you notice the black area is down here. Okay, that means the uptrend will still continue here. Okay, in the opposite case, meaning you see the black area and the downtrend, then this black area marks the swing zones. When you see the black area like this, that means you're holding a short position, right? If you see this black area and you also see a buy signal, then you can continue to hold that position. So the black area is there to let you know whether you should decide to hold that position or exit it, depending on whether you're trading a long or short position. This black area is the swing zone, and it indicates that this is the section where a momentum effect might be created. You can hold on if you predict an uptrend or downtrend. Then in that area you can continue to hold your position. So I don't know whether everyone will trade with the trend going up or down. That's up to each person, but this black area is the swing zone. That means if you see, for example, a uptrend and this buy zone has already moved up and you see the black area is down here, then let's say you enter a position, you can hold that position to keep profiting, to keep making money. In the case where you see this black area but the buy is going down, then you can exit partially and start applying your risk management strategy to protect yourself. We don't know whether the market will continue to go up or down. We can't know that. So we'll set our stop loss as a trailing stop to protect our capital. Okay, so this part is what tells us about the buy and sell momentum. And down here, same thing. It shows us the buy and sell zones. The RSI area will move ahead of the AO area, and then it will determine the entry zone. Okay, so for our entry zone, this helps us identify whether the trend is up or down. Then we combine this with risk management to determine our entry point. After that, we look at the order block. If we see that the order block has strong buying volume, we know the trend is upward. At that point, we just need to use risk management to find the right entry point to decide at what price to buy so we can avoid a downward trend, right? Exactly. Or if we want to short, we'll rely on these signals to assess the trend so we can decide on our entry and how to manage risk, right? So the RSI part comes before the AO part, and then the AO is combined with risk management, which together form a common point. Well, then I suppose I will go back to the indicator now, just as before. Go back to the indicator, and then after you've done that, I'll go ahead and turn it off for you. For example, I'll turn it off. Okay. So now, when I turn everything back on, we have the MA line as protection, and you can see here the trend is still an uptrend. We see the price action above the MA, so we know basically when it's right here, we can guess that if it ends with a price action below this MA line, it's a downtrend. But now it's starting to go up, it ends here, and there's a chance it won't go down, but instead forms the starting point of an uptrend. So this could be the end of the previous uptrend and the beginning of a new uptrend, or it could go down. At this point, I see the price action slowly moving back here. When I turn on the filter, I will clearly see that I combine it with the buy signal, I combine it with risk management, and then I combine it with momentum. The buy momentum is very weak and the sell momentum is very weak. So at this point, it will show sideways. Then I see that here, RSI creates a buy, and here it tells me to buy. Is it matching? Does it match with the entry point? So here, I'm just giving an example to show everyone the entry on the higher time frame, the 1 hour chart. There, if you switch to the 10-minute chart, we're actually in an uptrend, right? We're in an uptrend. So if anyone was trading, you would have already made a profit by now, right? So as I explained, we're about to wrap up now. So everyone understands, right? When the price reaches this point, we know we have to sell to take profit, right? All right, so this is the part where I explain to everyone that when you trade and use this indicator, it already has a complete setup. You just need to know what your purpose is when using this tool. If you already have experience and know how to trade, then using my indicator is very easy. But if you don't know how to trade yet and need to learn, you should use it for at least a month. In here, there are details that you need to start remembering the concepts in those details. Gradually, as you learn and gain experience trading, you will slowly understand more, and only then will you become proficient at trading. If you already have knowledge and a solid foundation, then when you use this indicator, it will help support your mindset, allowing you to invest properly and avoid risks. Usually, if you have money and a lot of capital and you trade stocks, most of the time you'll profit more than if you trade options. With options, you usually lose more. For me, after many years of trading, with options, it's 100% that you'll lose money, not just 90%. But if you trade stocks and use my tool here, most of the time you'll win more than you lose, because you'll be able to clearly see the trend. First, the entry and exit points. Second, you'll be able to see how the market trend is displayed. Just by looking at it, you can tell how the market is moving. Here, the buy volume, the buy and sell are clear. And here, this is the order block I explained earlier. Okay, yesterday it showed the order block here. Then the price action moved up, but when it couldn't go higher, it started to drop. That's all. So this is the time frame from yesterday. This order block is from yesterday. Then it started to drop, and as it dropped back here, we still had a buy. And then today, a new order block formed on the 15-minute chart. See, a new order block formed. It came back and dropped again, see? When the number of buyers is greater and the number of sellers is less, the trend is upward. And when the price returns to yesterday's order block, it will test it, right? Right at the uptrend director line, it matches, doesn't it? So when it breaks through this area and tests it successfully, the trend will go up. So from this point, it will increase until the end of the day, until 3 or 4 hours. That's it. Okay, so in this part of the video, I'm sharing the concept of how to use the indicator and how we should understand it. Okay, so how do we use it? This indicator part is very simple. When we use the indicator, we only need one indicator. Okay, and that's enough to use it. This is the part where we trade sensitively. Okay, and if you want to trade stocks, just turn on the stock trading feature. Okay, we just turn it on. It's up to you. If you want to use the MA, then use it. Otherwise, just use it simply like this, so it's easy to see, so you know where you are. That's all. And if we're cautious, if we're sensitive in this market, then we just turn it on, use all the features, and we'll know exactly where we are. And when we turn on the MA, it displays everything clearly. An uptrend is shown in green, a downtrend in red, so we know exactly which market we're in, which helps us feel at ease and not have to guess. That means we're not just sitting there guessing whether the price will go up or down, or buying without being sure. But when we have this indicator, the direction, the trend of the market becomes much clearer. At that point, we know where we are. We know how to invest in the market, right? So we no longer have to worry. We're not afraid anymore. When we invest, our mindset will be better, more stable, and we'll feel more confident. Okay, I'll end this video here, and I'll see you all next time.